Welcome to How to Retire in 3 Years or Less on $9,000 per month, tax-free. My name is Peter Schultz, and I'm the founder of wealthbuilderpublishing.com and thewinningsecret.com. If you go to Wealth Builder Publishing, you're going to find a lot of really great ways to make money. The cool thing about the winning secret, which is what we're going to talk about today, is it's the fastest way to make money. You can bring in money every month. I'm going to show you exactly how to do that. Every week. You can have a payday every Friday, sometimes more often than that. So let's get going with this strategy. But once you build up some extra capital, we have some micro caps and some other really cool ways to make money. But for right now, we're going to talk about those weekly paychecks and how to collect them tax-free. So to be clear, we're going to be talking about trading in the stock and options market. So obviously there's no guarantees. All we're trying to do is tilt the playing field in our direction. And what you're about to see is the best method for doing that I've ever seen in my 30+ year trading career. This thing just works. There are 3 key elements you're going to need in order to retire in comfort in 3 years or less. The number one thing is safety. This is sacred money. You can't lose it. Warren Buffett and Charlie Munger are famous for coming up with all these pithy sayings. And one of my favorites of Warren Buffett is the first rule of investing is don't lose money. The second rule of investing is see rule number 1. And I always got a kick out of that. And of course, there's no guarantee you're not going to occasionally lose money. But what you want to do is set the playing field, tilt the deck so far in your favor, it actually be kind of a weird or a strange event, a little bit of an anomaly to lose money. And that's what we're going to do here. And fortunately, we can set that up through the options market. So number 2, you really need to get better than market returns. If you don't have many years to invest, this part is critical. So what we're really trying to do is compress time. So all those examples, they want to give you is, if you started, putting aside this amount of money when you were 20 years old and, it compounded at this interest rate for the next 60 years, you'd have this great retirement. Well, that's really, really unrealistic for just about all of us. I mean, there's something that happens called life, right? There's student loans, there's the occasional divorce or a bankruptcy or little, holes that we step in along the way. And sometimes you find yourself, staring down the barrel of, hey, I need to retire in the next 3 years and I don't have enough money. So I want you to just think about this as a possible vehicle. And the really cool thing is you can test it out. You don't have to take my word for it. You can take I'll show you exactly what to do right here. You can take a small amount of money and test it and say, hey, does this method really work in the real world? And I love that. I love being able to test it. Number 3, a tax-free build-up and payout. And I have this wise accountant once. He did tax returns for a lot of traders. And he said, remember, the only money that matters is the money you get to keep. So those are 3 tenets: safety, better than market returns, and a tax-free buildup. So that's the purpose of this presentation. This is what I'm going to show you. And I think you're going to be a little surprised at what kind of an opportunity you have, no matter where you've been up to this point, or how much success you've had trading, or if you've even traded at all. We're gonna get into some cool stuff here. So with all the investments you've done in your life up until now, did you ever have an exact percentage probability that they would work out? You get it, you buy a lot across town, you invest in real estate, everybody tells you to do that, or you get a fixer-upper house, or you buy a stock. Did you ever get a little label or, a little explanation of, you've got exactly this percentage chance of success? Of course not. You just size things up and you assess them as good as you can. And then, you either get a green light or a red light. Well, the really cool thing about this strategy is because of a Nobel Prize winning formula called the Black-Scholes options pricing model. And this is the formula that made the options market possible back in 1973. This formula tells you exactly what your percentage chance is of making money or losing money every single time you put on a trade. So, and so here's like a typical situation. So what we're going to do, just to explain what we're going to do, is we're going to sell this option and we're going to buy this option right here. Okay. And that, because this bottom option, because it's closer to the underline, it creates a credit in our account. And like I say, if you've never done this before, if this is all completely foreign to you, don't worry about it. I'm really good at explaining all the details. I don't assume we're all rocket scientists. I know I'm not. So I need simple explanations. I assume everybody else does too. Now listen, if you're really experienced and you've traded a lot, and maybe you've traded options a lot, and you go, oh, well, Peter, this is just a credit spread, or this is a bull, a bull put spread or a bear call spread. Yeah, I know all about these. Well, maybe you do, maybe you don't. So the devil's in the details, and I'm going to show you some things that you can do that really stack the deck in your favor. So this is typically what we do. This stock has been continuously trending lower, and we're selling above downtrend resistance, this big black line that you see sloping down right here. And so what's interesting about the Black-Scholes pricing model is, I'm going to go back here, is that it doesn't take trend into consideration. It doesn't take the fundamentals into consideration. It doesn't take the overall market into consideration. All the Black-Scholes model does is it says, okay, so this is a down bar, so it closed right here. And it says, okay, with the stock right here, with this amount of time until expiration, and this level of volatility in the stock, what are our chances of winning? And I'll tell you what, I only do trades with an 80% chance or better of winning. But here's the amazing thing about that. That's just based on the Black-Scholes model. So it doesn't take into consideration trend, doesn't take into consideration fundamentals, doesn't take into consideration the overall market. So now what are your chances of winning once you factored in all those things? So let's take a look at, this is the options chain, and we can go down here with this particular trade, and we look right here, and on this trade we have an 82.71% chance of winning before you take all those other things into consideration. So our chance is pretty good that you're just going to win on this trade. And you know what's cool about this is you have all this opportunity the moment you put the trade on, and the potential profit for the trade hits your account the minute you put the trade on. So that money hits your account, and you have all the probability right there. All you got to do is set one simple little automatic order and actually forget you ever put this trade on. I mean, the whole idea here is just an absolute minimal amount of management. I don't want to be watching my computer every day. I don't want to watch the market jump up and down. That's a recipe for, being hauled away in a gurney, like mumbling to yourself. I don't want that. I want to be out playing. I want to be by the pool. I want to be climbing mountains. I want to be hanging out with my friends. I want to be doing cool stuff. And worrying about every uptick and the downtick of the market is really not a good formula for being calm and peaceful and happy. So once again, what I'm talking about here is we have an 82.7% chance of winning before market direction, trend, or fundamentals are considered. How much do they add to our probability of winning? We're probably, all other things considered, we're going to win on this trade. Is it because we're smarter than the next guy? No. Is it because we're better looking than the next guy? No, that would be nice, but that's not the reason. The reason is it's all built into the strategy. You know what I love about that? Is I used to think, when I first got involved in trading, I used to think, I'm going to win at this because I'm smarter, I'm quicker, I've been successful at other things, I'm going to be successful at this. And then here's an interesting thing about trading in the markets. They can be incredibly humbling. So you figure out everything, you think you got it totally dialed in, and you just get your rear end handed to you, and you lose your money, and you go, gosh, maybe I'm not as smart as I thought I was, or as quick as I thought I was, or whatever. So what I decided I needed after a number of years is I decided I needed a mathematical edge. I needed an edge that was so good that it worked with or without me. And if you've ever lost money investing, you might be with me on this. We need an edge that works, doesn't matter what we are, doesn't matter what kind of luck we've had, but the strategy just works for you, and it does so consistently. So let's take a look at a typical trade. By the time we stack all the factors on your side, you can expect to win on 8 out of 10 trades, whether you watch your trades or not. And that's the part that I really like. It's just the lifestyle part of this. You don't have to watch your trades. You put them on, you set them, you forget them. In fact, you're better off in many cases if you don't watch your trades, making this not only a great cash flow strategy, but a great lifestyle strategy as well. And for the trades that don't work out, we've got a proven strategy for cutting any losses in half, so you can easily make the money back plus some on your next two trades. And I'll show you how that works. This strategy truly gives you a mathematical expectation of winning, and that's all you need to make money over time, exactly what you want for a realistic retirement plan. Just do this consistently, and it's not much work. I mean, it's a couple of mouse clicks. So you get better than market returns if you don't have that many years to invest. This part is critical. And imagine if you could combine the best part of a business with the best part of investing. So the best part of a business is consistent weekly cash flow. We love having that money come in. That's why people get up every morning and have, bakeries and plumbing businesses and go out and fix things, make things, because they want that weekly cash flow. The best part of investing is it's passive. It doesn't take much of your time. So imagine having both of those. That could create a pretty amazing lifestyle. And not years from now, not way down the line. I mean, you can start reaping these rewards, right away this week if you want to. So the better the market returns, this strategy combines both. It does something pretty remarkable, and it's your secret to having a real shot at retiring cash rich in 3 years or less. It can create returns every week. When it comes to investments, most people think in terms of annual returns, but if you change your thinking to creating weekly returns, your expectations rise along with your probability of success. So a lot of the time, we can get more out of life simply by expecting more out of life. Now, this isn't as woo-woo as you might think. I mean, we actually change some of the things that we do. One of the things that we're going to change with this strategy is instead of investing in something where we don't really know when we're going to get out, we don't really have a time frame for that. We get into a stock or something, we just cross our fingers and we go, boy, I hope this thing goes up. And then when it does go up, we don't really know when to sell. Well, the cool thing about this strategy is there's expirations every single Friday, and come heck or high water, that expiration is going to happen. That option is going to go away. Well, the cool thing about this is we're on the selling side of the options market. So when you buy, timing is really critical. And if you don't get everything perfect, you're probably going to lose money. I lost a lot of money. Most options traders do lose a lot of money learning. Most options traders that stay in the game and make money over the long term, they finally figured out, selling short-term options is the way to go because you have time decay on your side. So it's a procrastinator's dream. If you just don't do anything, you don't get around to closing your position, you just kind of let it go, you make money. It just expires worthless. You collected all that money, and then it takes up permanent residence in your account. So back in 2012, the Options Clearing Corporation started experimenting with weekly options expirations instead of the traditional monthly expirations with just a handful of the most active stocks like Apple and Google. But now, years later, there are over 430 stocks with weekly options, plus a whole bunch of indices like the S&P 500. So this is a monumental change to the options market, and it now means you can create a whole series of weekly paychecks, which is what my entire subscription service is dedicated toward providing. By the way, when I say subscription service, that implies that there's a monthly fee for it, and there is, and we'll get to that in a minute. But here's the thing. I have a philosophy about this kind of thing, and that is that if the financial information is really good, if it's really worthwhile, you should never have to pay for it. If that information is really good, the market should pay for it. So within one trade, in many cases with this service, it pays for your entire year's subscription. Every other trade you make that's successful puts money in your pocket. I love that because it's such a great value. People rarely say no. And when they do join, they don't get off of it. They stick with it. It's been really good business for me. It's been fun. It's really fun helping other people make money. So the better than market returns. If you start thinking in terms of weekly returns instead of yearly, you have the potential of dramatically increasing your returns. Because even if your weekly returns are modest, there's so many of them. There's 52 weeks in a year. And if you compound those returns, you'll be shocked at what it can add up to. We're going to get to that in just a second. But for now, let's take a look at the third pillar of our plan, which is a tax-free buildup and payout. And remember, the only money that matters is the money you get to keep. So if you've ever paid a lot of taxes in your life, this part should be extremely appealing to you. So I never worried about taxes back when I was young and I didn't make any money. They just took them automatically out of my paycheck and I didn't worry too much about it. And I just looked at what I netted and I knew that was my money and I just left it at that. I didn't worry about it. So when you start worrying about taxes is when you start making some substantial amounts of money. And also if you get your own business or you invest, and nobody's automatically taking it out of your paycheck, and all of a sudden the government says, give me $50,000, give me $100,000. Or I had a really good year a couple of years ago, and this is all from investing money that I made. So this is exactly the kind of thing that I'm teaching you. And I got a $2 million tax bill. And all of a sudden you wake up and you sit up and you go, oh gosh, I guess taxes do make a difference. And they do. So what can we do about that? Legally, and where we don't have to be looking over our shoulder, and do something where we can build up a lot of tax-free profits. So in the Taxpayer Relief Act of 1997, Congress gave us a great gift I believe every American should take advantage of. And this is just absolutely awesome. It's the coolest thing in the world. And it is the Roth IRA. Now, if you've had a Roth in the past, if you have a Roth right now, if somebody's told you about a Roth and you go, oh yeah, that sounds kind of boring, whatever. Roths are not boring if you're making a ton of money. They're boring if you got a couple $1,000 in there and it's just kind of sitting there. But if you're making a bunch of money, like I'm showing you in this presentation, it's not boring at all. With a Roth, you put after-tax money into a trading account. But that's just like, if you opened any trading account, that's what we do. But here's the kicker. Any money you make is yours to keep. That means both the buildup and the eventual payout is completely tax-free at both the federal and state tax levels. So the state income tax people, they derive how much you owe them based on what you owe the feds. So if you don't owe the feds anything, you don't owe your state anything. And with a Roth, you don't owe either entity anything. I'll tell you, this kind of gets your imagination going, because if you think about it, if you had a way to really make good money, really good cash flow, and you're doing it all in a Roth, you could live on that. You could literally live on tax-free income. Look, I believe we need to support our country. We need to pay for, fire service and the police and all that. There's so many taxes. There's property taxes, there's sales taxes. Don't worry. You'll pay plenty in taxes. If you're worried about it, don't worry. They'll figure out a way to collect money from you. But this is a really nice way to enhance your lifestyle by really reducing your tax bill. And so there's some rules, but they're not that bad. You can contribute up to $6,500 per year or $7,500 a year if you're over age 50. Now, that goes up periodically, because of inflation and everything. So I'm gonna show you some returns based on $7,000 a year, right in between these two. So you can contribute to a Roth if you make up to $150,000 for single filers and $228,000 for married couples. So pretty good money if you're married, and you can still contribute. And these figures are up from $135,000 and $199,000 for 2018. So they don't raise them every year. But periodically, they bump them up there. So you can contribute anytime during the tax year right up until April 15th of the following year. So that gives you a lot of time. And if you have the account open for at least 5 years, you can start taking contributions as early as 59 and a half. But unlike a regular IRA, you don't have to take them. So with a regular IRA, I think it's like age 70 or something, they force you to take the money because they want to tax it. But with a Roth, you've already paid taxes on it, so they don't give you too much hassle on that. 59 and a half, I'm beginning to realize, isn't all that old. Gosh, a lot of people live into 80, 90, 95 years old, so 59 and a half, you got a lot of time to enjoy yourself with this big tax-free source of income. So let's put it all together and see what we've got. So it's the safest strategy anywhere, and I can show you that by just the probabilities. Weekly income that can compound to some pretty astonishing returns. And a strategy that is perfect for a Roth IRA, where you have both a tax-free buildup and a payout. And if you join my service, I'll show you how to answer all the questions when you apply for your Roth IRA, and even the right brokerage to apply for, the perfect brokerage to apply for. And I give you all that information. So I want to make sure you're really set up right so you can really take advantage of this. So let's see what that translates into the real world. And let me show you some typical trades that take, I've taken them right from my winning secret trading letter. This is a little sample of it. And so these are just trades I've done in the last couple of months that show you exactly, and I didn't cherry pick. I mean, I just went week by week. I do 2 trades per week. I do what I call a Roth trade, and then I do a more aggressive trade. So the Roth trade, one isn't really more aggressive than the other. The difference is that the Roth trade I always do with an index, which I consider a little safer because you don't have that single stock risk, where all of a sudden the CEO gets indicted or something and the whole stock plunges. That doesn't happen with an index. Like the S&P 500, the risk is spread between 500 different stocks. So we use that for the Roth trades, and then what I call the more aggressive trades are done with regular stocks because there's some great opportunities there. So here's one. This is on Burlington Stores. Look at this trend. I mean, this is a pretty easy to identify trend. I love this where the technicals are so clearly set up. So we took in 70 cents on Burl, and it expired May 5th for a 9-day 39% profit. Now, I just want to let you know what we're shooting for. What we're targeting is a 25% return every 9 days. I call it 10 because we come out with the trades on a Tuesday night, but we enter the trades Wednesday morning. Gives you plenty of time to read it over and position yourself, and then you can enter your trades. So by the time we get to Wednesday, it's 9 days because it's always expiring the next Friday. So not that Friday, 3 days away, but 9 days away the following week. And then we do these trades every week. So you have overlapping trades. So we've usually got something expiring every Friday. Why do we get 39% instead of 25%? Well, occasionally what happens is we'll put out the trade and I'll say, get a minimum of this amount of credit, get at least this credit. But the stock jumps towards our strikes or whatever, and we get a lot more credit, so we get a bigger, fatter return. So that's what happened here. This one just expired worthless, as you would expect it to. Our next one was on RH. That's the old Restoration Hardware. And here's my commentary here. After plunging for all of March and most of April, RH has been making a comeback. But higher interest rates and more bearish market are likely to turn this one lower, especially with overhead resistance just above at 266. So this looked technically like a good trade. So we took in 60 cents on RH and expired May 12th for a 9-day 32% profit. Now, if you, I base everything on 25%. Well, I'll show you the total returns here in a minute, but this is on Goldman Sachs. It kind of peaked and then fell over. Also good trade technically. We took in 73 cents on Goldman Sachs, but closed the play early on May 19th, paying 5 cents, netting 68 cents for a 9-day 38% profit. Now, I want to point out what we did here. We don't always let these trades go to expiration. Sometimes we buy them back early. If I get a little nervous, if I don't know what's going to, like some big, maybe an earnings report's going to come out, or the Fed's going to make an announcement, there's going to be some big market moving announcement, I don't want to wait around to see if it goes against me. If we took in 73 cents and we can close for 5 cents and still net out 68 cents, I mean, why would you stick around for 5 cents? We just close it early. We mark the trade in the profit category, we take all the risk off the table, and we go on our merry way and look for some new trades. So this is ADP. It's been in a constant slump. You can read the commentary here. This is just right out of my newsletter. We took in 50 cents on ADP, but closed the play 5 days later. On May 24th, paying 15 cents and netting 35 for a 5-day 18% profit. Not bad for closing early. This is the SPX. We sold a bear call spread on the SPX for $1.25, but we're stopped out 2 days later to $2.25. Okay, so this is where it gets interesting. Most of the time, you don't have to do anything on these trades. They just expire in your favor. You keep the money. You were like taking a nap in the hammock or something, and this money kind of almost got made for you just because the system that we're using is so good. Occasionally, we get stopped out. So that's what happened here. So we originally collected $1.25, but we're stopped out 2 days later at $2.25. We rolled up, and let me show you what that looks like, and sold again for $1.15, netting 15 cents for a 4% profit. Now, this is a trade that went against us. So let's see what happens. So we sold the 47, 41.70, 41.75. So that's this spread right here for $100.25 credit. Now, by the way, if you haven't done this before and you go $1.25, well, Peter, I need more than $1.25. Well, yeah, of course we all do. So, you know, options come in contracts. You just do 10 contracts. If you want 10 contracts on this, is you take in $1,250. If you did 100 contracts, you'd take in $12,500. So you just set the amount of risk that you're comfortable with for your size of account, and you adjust these, and I can show you how to do that, but you adjust these to match your account size. But you know, you're bringing in some pretty decent money, and basically we just refer to that as a percent of return, and then that way it just doesn't matter how much it is, it's just going off a percent. So here's what happens. So you know, the S&P 500 was going down like this. Well, this looked like a perfectly good trade. Well, all of a sudden, these two green bars, boom, and you know, all of a sudden, boom, we're stopped out. You know, we didn't see it coming. Some news happened, so we got stopped out at 225 for a $1 loss. You know, the difference between these two is a $1. But we didn't think it was going to keep going up. We thought that there was going to be some volatility here. We thought it was going to pull back, and what do you know, it did. So we rolled up and sold the 41.90. We sold this one up here for a $1.15 credit. And so instead of a $1 loss, we had a 15-cent net credit for this 4% profit. The reason I'm showing you this is very simple. I want you to know that just because you get stopped out and you take an initial loss, you don't have to live with that loss. You can roll higher, you can roll lower, you can roll, in this case, to the same expiration right here, or you can roll to a farther expiration. There's a lot of things you can do, which is why I like to refer to them as options, right? I mean, options give you options. And the thing is you don't have to worry about what to do when it happens. I send you out an email. I even send out a text. You know, once you're a subscriber, it's very important for you to make money, because if you don't, you're not going to stick with me. So I do everything I can to make sure you start off profitable and stay that way. So we sold a bear call spread on the SPX May 16th for $1.05, got stopped out 2 days later for $2.60. Now the reason I want to show you this one, you know, obviously this thing jumped way up and stopped us out. So this is for a 39% loss. So in an entire 2 months of doing trades, 2 trades a week, this is the only one that I could find that was an actual loss. Not because I'm so fantastic, but because the system is good. The strategy is good. What I show you is good. But occasionally you do lose. So when we get stopped like this, instead of losing, so this is a $5 spread, right? So normally you'd lose $5 on that, but we only lost 39% because we always stop out pretty much at the sold strike. We don't let it go any further than that, because then your losses really pile up. So I want you to know, if you do have a loss, not the end of the world. Look, if you're losing 39% on a losing trade and you're expecting to make 25% on your winning trades, you can see that all it takes is like 1.5 trades to get you back to break even. Two winning trades and you're in the winning column again, but you have over an 80% chance of winning on every trade. So the math just works out in your favor. If you do this the way I show you, the math says you're going to make money. So here's another one, ASML. On May 24th, we sold the bull put spread on ASML for 90 cents and it expired 9 days later. This is unusual. I had to show you this because this is a real trade, for 56% gain. And the reason it's so great is because what happened is we proposed this trade, and then it, as you can see, so this is when we initiated the trade, and we had a big down day, right? So it plunged towards our spread. So we got this huge 90-cent credit, which is great. It immediately turned around and just bounced straight back up and never even came close to our spread. But, you know, look at this trend, right? We had the trend in our favor. We had the market in our favor. We had the math of the trade in our favor. We had everything in our favor. But my gosh, you know, that's double. This 56% is more than double what our minimum target is. So this can be pretty exciting. So let's have a reality check. We target a 20 to 25% return with over an 80% chance of winning. If that's all you had going for you, you could make a fortune doing this. We also hold back. Something I want you to know is we hold back about 40% of our account for buybacks and rollouts. That's to make a bad trade into a good trade, but you need a little bit of cash to do that. So we're not making this 25% on our entire account. We're making it on about 60% of our account. Keep in mind that 40% that you're holding back, there's no risk. That's just in cash. So that's kind of a good thing. And as you've seen, we don't always win. So what can you realistically expect? Let's take a look. So we're making trades every week. So you're usually bringing in returns every Friday. So what I'm going to do, if we looked at the numbers at 25%, it would blow your mind and it would be outrageous and nobody would believe it. And it actually, in the real world, there is little pitfalls, like things do happen, right? So let's cut this in half. 12.5%, half of what we target per week, that's 50% per month. Pretty outrageous. But because of buybacks and losses, that's too rich. Let's just say it's half of that. So instead of 50% per month, now instead of per week, it's half of that is 25% per month. So that's 1/4 of what we're targeting. We're targeting 25% per week. Let's say all we can get is 25% per month. Okay, let's lower it even more. Let's get those expectations down, down, down. But to be extra conservative, let's cut that down again. Personally, I think you can do an easy 10% per month. I mean, like blindfolded, and we've done better. But let's make these estimates really, really conservative. The reason I'm doing this for two reasons. Number one, I want to lower your expectations so you're not all starry-eyed thinking you're going to win on every trade. Doesn't work that way. So I want to lower your expectations so I know that we can exceed them. But there's a second reason, and it's probably even more important. I want to show you that even with really low expectations, a really low target percentage, you can still make an absolute fortune doing this over time in a tax-free account. Let's take a look. So let's say all you can do is just 7% per month. Keep in mind, once again, we're targeting 25% every trade. The last couple of months, we've exceeded that by a long shot. But we're cutting it back, cutting it way, 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 way down. And all we can do is 7%, just a tiny, tiny fraction of what we're shooting for. Okay? That should be realistic in anybody's mind. So if we're just talking about 7% per month, that's 3.5% every 2 weeks, about 1/7 of what we are targeting. If you follow my directions, the mathematical probabilities say you'll do way, way better. But let's just be really, really conservative and stick with the 7% per month figure. So if you open a Roth today and put 7,000 in it and add 7,000 just per year, not every month, that's 7,000 per year for 3 years, and just get 7% per month using this very safe strategy, what do you have at the end of 3 years? Now, would everybody agree, would you agree with me right now that based on what you've seen, so we're targeting 25% really every 10 days, but we're getting 39%, we're getting 28%, we're getting 32%, we're doing better than that. We hardly ever have losing trades. When we do have losing trades, we have ways to roll out and up and make them better. So, I mean, what we're actually doing is way, way better than this, but at 7% per month, using this very safe strategy, what do we have at the end of 3 years? This is what it looks like. This kind of blew my mind when I figured this out. What does this turn into? So first of all, let's take a look at this. This is the end of year 1, right? So your buildup is a little slow in the beginning. So what I want you to do is start this ASAP, start it today, and start doing it. So your buildup is good, it's respectable, but it's pretty conservative. Year 2 starts to get very interesting because you have a greater amount of money to work with. So your account rises faster. It starts rising exponentially. And as you can see, in year 3, it just absolutely takes off. So at the end of 3 years, you've got, according to our very conservative 7% per month, $127,885. And that comes to $8,952 in monthly cash flow. And it keeps going up from there. So the very next month, you're making over 9,000. And what do we know by looking at this chart? Is that we are not sticking with this $9,000 figure. That's just what you get the next month. If you keep doing this, this grows. The 9,000 grows. So, if you have another way to make money, if you're working at a job, if you have a business, great. That's fantastic. Keep doing that. This doesn't take much time. So I've got the CEO of one of our major companies that, like I say, I have this microcap service, which has been unbelievable. And I've really gotten to know some of these CEOs, first name basis. I can call them on the phone anytime I want. I get great information that nobody else gets. And it's not insider information, nothing illegal about it, but you're not going to get this information from anybody else, and you're certainly not going to get it from any news service. So definitely worth a subscription there. But my point is CEOs are busy. This guy's incredibly busy. He works like 12 hours a day. He's a very ambitious guy. He got a hold of this strategy. We just, we met at a conference, got to talk. He says, I'm going to try that. He is so incredibly successful. He absolutely loves it. And he can do it no problem working 12 hours a day. He just puts his orders in, kind of forgets about them, checks them once in a while. And he's one of my most successful students. He's just sharp and he loves it and he does it, but he does it with a huge job and a huge load. So I'm pretty sure you can do it too. So now I know, so this chart that we just looked at is a perfect chart. And I just want to say right up front that things never work out perfectly in the real world. That doesn't ever happen. You know that. I mean, stocks, the markets, everything goes up and down. Everything's in flux all the time. That's actually what makes this life interesting, is there is a lot of variety. But think about that chart. What if it even comes close? Now, we cut those returns way, way back to 7% a month instead of 25% every 10 days, right? So we've already got some pretty conservative estimates there. And what if that performance even comes close to what I showed you? You're going to end up doing really well. And you can try this strategy out for yourself. This is called selling credit spreads. You can Google it. You can look it up on the internet. You can get some education. You can start with as little as $5,000 and to get your trades going. And you're not going to even use that whole amount. Like I said, you set some of that apart. So a typical $5 spread, you get $1, that's $400 in margin. That's all they're going to hold back. You can start this strategy with a fairly small amount of money. You can prove it to yourself. You can get adept at it. You can understand the pitfalls. You can understand how to reduce your risk. I show you that. If you want to come on board with me, I'll show you everything. I have really good, easy to understand, fun education. So there's just one problem with doing it on yourself is if you don't do well right off the bat, you might quit. And that's what most people do. And that would be a shame because this really is the best way to trade because of your very high likelihood of winning. And the hands-free nature of the trading once you put on a position just doesn't take a lot of monitoring. You don't have to be Johnny on the spot. All these other trading strategies, oh, when this line crosses that line, you got to do this or that. Well, what if you're out at work? What if you're enjoying your life? What if you're playing with your kids and you don't see that line cross that other line? Oh, I'm sorry, you lost all your money. Who needs that? That's not a real viable way to make money. I need a way to make money where I don't have to watch it. Heck, I don't want to watch it. So to make sure you start off profitably and stay that way, I put together an educational package that is the best anywhere for this strategy at a fraction of the $2,500 sales price we used to charge. So a few years ago when I first started having success with this, I just thought, boy, people are, should be willing to pay a lot of money for this. And they were. I sold a lot of these $2,500 packages. Here's the good news for you. I've decided I want a bigger subscriber base. I want more people involved. The cool thing about options is there's enough liquidity there where we don't really move the market. I can have a lot of people come on board. You're never gonna get in each other's way. When we're trading options on the SPX, believe me, there's plenty to go around. So I didn't need to charge that much. I could lower the price and get it in more people's hands. The other thing that's good for you is that since selling it for that amount of money, I've constantly added to it. I've improved it. I've improved the strategies. I made new, easier to understand videos with, better charts, better examples, more pictures, making it more entertaining for you so it's not a big chore to get through. I think you'll really like our education. It's really fun, easy to understand, and we help you every inch of the way. So don't charge $2,500 anymore. The package is called The Winning Secret, and it includes a lot. First thing you get is you get a little webinar, short little webinar called How to Trade Credit Spreads for Fun and Profit. It shows you step by step how to trade credit spreads, how they work, why they work so well, and how you can get them to work for you. You also get a 161-page downloadable ebook complete with color graphs, charts, pictures, everything you need to start off trading profitably and stay that way. Plus, you get a 10-chapter video series where you can hear and see exactly what to do to start generating income. That's really fun. I just made it not too long ago. Really cool. Not real long videos. They're to the point. They're entertaining. They'll get you going, and they'll show you exactly what to do. You'll also gain access to our archived webinars and video tutorials so you can discover new strategies and ways to improve your returns and limit your risk. And you'll also have access to all new additions for life as an owner of this package. Plus, you'll get videos that show you how to set up automatic orders with our favorite broker for spread trading to automatically trap profits, whether you have time to watch the markets or not. This is the lifestyle part of this. I call these setting money traps, and it just works beautifully. And with your subscription, you get 2 high probability trades every week. I'll show you exactly where to sell your spreads and exactly how to sell them for the possibility of maximum gains with minimum risk. Plus, as an extra bonus, you'll get a 10-module video course specifically on trading the weeklies. Best thing to happen to the options market ever. And we all know the best way to learn is through one-on-one instruction. So listen to this. Everybody else just gives you a package you can access with a password, and you access the information on your own. That's great. That's really cool. But sometimes it's nice to have somebody to hold your hand. So included in this package is a free one-on-one orientation to make sure you get your account set up the right way and know how to take the best advantage of your new strategy. So this is Deanna. She's going to guide you around our service. She's going to show you what to do. She's really friendly. She's really nice. This is just a phone call that you guys set up together. You can schedule yourself on her scheduler, and you can get some hand holding and say, here's how you do it. Here's how you set up your, this is what you do. As far as the service is concerned, how do you take best advantage of the service that I'm giving you? Now, this is really cool. But the thing that is really making people money like you cannot believe is this is Alicia. Now, Alicia is not just good looking, but she's also a little bit of a genius with finance. So I live in a college town. She graduated in finance with a degree in finance. She's really good with numbers. She's incredibly sharp. I got to tell you, she's a lot smarter than I am. I'm lucky to have her around. And she's our coach. She does 45-minute personal coaching sessions that are tailor-made to your learning pace and skill level. And this session is designed to increase your knowledge, confidence, and profitability. So here's what people do. I'm including a coaching session with Alicia in this package. And she is brilliant. And what people use her not to figure out what a call or a put is. People use her to make money. So she's not going to tell you what trade to make. We're not licensed brokers, but she can tell you a high odds trade, a high probability trade, what a good setup looks like. People use her to make money. This is like beyond education. I mean, people, so we have 3-session coaching packages. We have 8-session coaching packages. I strongly believe that after just having 1 coaching session with her, you're going to get either a 3-session or an 8-session. And this is why I include this, because she makes people money. Like I said before, I never want you paying for anything. I want the market to pay for your coaching, your subscription. Any information you get from us, I want the market to pay for. Now, you're going to have to obviously write the check up front, but I want you to get that back as soon as possible. Alicia's a fan, and plus you're going to love her. She's got the coolest personality in the world. I actually love having this gal around our office. And when I'm thinking about a complex option strategy, this is the person that I run it past right here. So you're going to really like her. She's great. I put together a whole package that you can access all of this. I want you to come on board. I've included everything, the kitchen sink, the orientation, the coaching, everything. You're going to see it all laid out for you in retirementfreedomplan.com. If you want to write down this URL, if you want details, you can always call us. It's a toll-free number, 877-507-7878. But if you go to this URL, retirementfreedomplan.com, you'll see everything that you get, the subscription, the education for life, the orientation with Deanna, the coaching session with Alicia. You get everything. That should be $2,500. I think almost anybody would agree. The people that paid that back in the day are still sending me thank you emails. I mean, this is still working for them. But you're going to get it for a lot less, and I mean a lot less. So go to retirementfreedomplan.com. I'm really looking forward to seeing you inside the site. Really forward to getting your questions answered, getting you access to all this really good, cool education, and actually getting you set up with some trades where you can start making money literally next Friday. So you don't have to wait for this. There isn't some big reward waiting way off in the future. Your reward, you can start getting it right away. So looking forward to having you on board. I really appreciate your time with me today and the attention. And I'm really looking forward to making some money together.